Good morning, investors. Today I'm going to talk about what's going on in the markets, how the markets have reacted in the past week, and so on and so forth. Let's start with interest rates. Yes, interest rates have been cut, and they are probably going to continuously be cut. We have seen a 25 basis point cut, and why that matters is it's going to impact the way that businesses borrow money. So, with lower interest rates, it's cheaper to borrow money. Companies are going to want to borrow more cash. Now, one of the unfortunate side effects of lowering interest rates is driving up inflation. So, with higher inflation rates, people are starting to get a little bit more antsy, and we see that gold is starting to become more interesting to a lot of investors. Not only investors within the United States, but around the world too. So, other foreign countries have bank systems that are interested in buying more gold rather than US dollars. And you have large talking heads like Ray Dalio who say that US debt is starting to get to an incredibly unsurmountable point, things like that. Now, there are other signs too. Grocery prices are jumping up. Again, inflation. It's a big reason why a lot of stocks are all going up. Now, Intel and NVIDIA are partnering together to develop some AI infrastructure and stuff like that. I don't know if that has anything to do with Trump sitting down with Intel CEO a couple weeks ago, but there's some interesting movement with the semiconductors in that space. Now, there is also a potential end to quarterly reporting. Now, what that means is instead of US companies having to report every single 3 months, every quarter, they would only have to report 2 times a year. So it would be half. Now, I've heard that EU does this and some other groups, but why they would actually want to do this? Well, the front-facing story is that they don't want to spend too much time worrying about doing the reporting and spend more time focused on delivering results. So more time working, less time telling everybody what they're doing. On the surface, that seems to make sense, although to be fair, there's also a level of transparency that I think a lot of investors like and which can also help to drive price movements. Now, then there's some information about different kinds of rare earth trade that might go into effect. US and China are going to be having some talks in the next coming couple of, I want to say days, China and Trump talks. Okay, yeah, so in the next couple weeks, sorry, this is, or maybe even a month or two, there's probably going to be a meeting in November. So that'll be an interesting time to talk about TikTok, what the future of that is, so on and so forth. I don't think there's anything else that's that interesting to talk about from a financial and a economic standpoint. Generally, we just need to know that interest rates are being cut, inflation is going up, most stocks are going to inflate as a result of that. I guess as one of the other small things is that there was a really funny thing that happened kind of, which was Meta had a presentation with Zuckerberg at the head. Zuckerberg presentation. Yeah, there was a live demo that failed, and because of that failure, what we see is Meta stock going down quite a bit today. Now, unfortunately, it is sad that sometimes investors will trade just because of a presentation. But if you look at the fundamentals, the P ratio is still 28, which is low compared to a lot of other tech companies out there. And it's on an upward trajectory generally still. So because it's FANG, because it's one of the top SP 500 stocks and high market cap, you know, it owns WhatsApp and Instagram, Facebook, etc. I still see them as a pretty valid candidate for short and long-term investments. Again, this is not investment advice. This is just me talking about my own ideas. But this is just for myself. Don't assume that I know anything. I personally think I might try to jump in on this if it goes lower. I'd probably want to jump in around maybe 60 something. So I think that's most of the general stories. I'm going to start diving into more specifics throughout the day. And then I will talk more about individual stocks that I think are really interesting. So yeah, we just see a lot of upward movement from SP 500 because Congress had a spending gap bill that passed. Spending gap bill, yeah, yeah. So there's a stopgap spending bill, but this is going to go to the Senate, and the Senate can decide whether they want to knock this out or not. So there's probably that's going to be decided. And then let's see here. Yeah, so tech is up. I'm leveraged on tech a little bit, and Robinhood is up. Now, the reason why I'm so bullish on Robinhood, so Robin is 2x leverage on Robinhood. Hood is the actual stock. There are multiple reasons why I'm so bullish on them. Number one, I use Robinhood every day. Yeah, I know, payment for order flow. Yeah, you always have to pay some amount to the market makers whenever you want to buy the stock or whenever you want to buy options, low liquidity sometimes, I know. But the reality is the user interface is extremely easy to use. I've tried Interactive Brokers, I've tried Fidelity, just completely crap to get money in. Now that is actually a good thing because you don't want it to be too easy, because you don't want people to just treat it like a gambling casino like they do on Robinhood a lot of the time. But the reality is people are going to want to have ways of making money outside of their jobs, especially as inflation keeps going up and the price of everything goes up. If you're making the same amount or you're getting a tiny little pay increase, that's not going to be able to supplement your income. So that's why a lot of people are turning to day trading, becoming retail traders. And that's where I think Robinhood stands to gain a lot, because investors are going to try to come put their money in. Robinhood's going to take a lot of that from suckers and also just from people who are trying to play the market like me. I might also be a sucker. I might just be a sucker who loses money more slowly than some other out there. But generally speaking, I think Robinhood's is going to take over a lot of the investing space. You see them already doing things like IRA retirement accounts. You already see them doing stuff like crypto, which a lot of Gen Z and younger folks are into. You even see them with these credit cards and different kinds of benefits and stuff like that. Now, I personally think that this is good to get people more access to these large companies where the rich are getting richer. And that's the problem with a K-shaped economy, is that you will always have these rich people getting richer and poor people getting poorer as they're getting exploited more and more and prices go up. So the way I see it is investing in a lot of these really exploitative or rich companies is a way of mitigating the risks of being poor or being stuck in these situations that you have no way to claw back the money that you are being exploited from. I mean, take for example, you have to spend money on things like internet, you have to have things like a data plan, electricity, whatever. So if those companies jack up their prices, then it stands to reason that even if inflation is causing those assets to go up, and even if they're adjusting their prices because of inflation, if you are invested in those things, you might actually be able to make some of that money back that you're losing to interest. To inflation. The real problem with that mentality is that it may not totally translate. Like if you're spending 10% more on groceries, you might only see a 5% return if you actually invest in some sort of food company or something like that. But you can kind of get the idea of where I'm going with that, because money is going to keep flowing to these large tech companies. So if you're not part of that, then you're missing out and you're just becoming more and more indebted to that ruling class. This techopoly, I think they call it. It's like an oligarchy, but it's a tech oligarchy. So anyways, let's go. Starting to dive a little bit into political space I'm going to pull myself back from, but generally speaking, some interesting stuff going on here. Oh yeah, there was this weird meme stock that I kind of played with today. It went up 10%, but I didn't put that much in. I just put a tiny bit in just to see what would happen. They are in real estate, so mortgage technology company, kind of like Opendoor, you know. So I just thought, I'll put a little bit in, see what happens. Speaking of Opendoor, Again, very meme stock like. I would stay away from this thing. This is those flash crash kind of things. Just like GameStop, it's going to probably keep exploding and then crashing. So I would absolutely just stay away from this dangerous thing. I actually lost 10K on this already. I just YOLO'd money into this. And if I had waited and held maybe one more day or 2 more days, I probably would have been able to sold that profit, but I sold immediately because I realized, wait, this is dumb. This is super high risk. I shouldn't be making these kinds of high risk bets with, like $100,000 or something. I put a stupid amount of money in, which I regret, but it's okay. If you look at the last week, I can show you. Yeah, so September 16th, no, wait, sorry. This is, let me go back to my account. Yeah, it was just a couple of days ago. So let's see, past week. Yeah, so it was probably here, September 16th. I put that money in and I lost like 10K, which is pretty funny. Yeah, I was up 10K here, you see, and then I was down. Oh, okay, so I lost about 15K. But I've managed to claw myself back up with a couple of other investments. Gold did something pretty interesting, which is, specifically GDXU, my 3x leverage, because of course, why not? It actually is up 10% or 13% today. Now, I wouldn't buy at this price because this is basically peaky right now. It's at an all-time high. Yeah, 66. Today is 69. Okay, nice. So this is pretty crazy, 13% up in one day, but you can see how sometimes it'll kind of waver. This was September 17, 11 a.m. I think this is all Eastern time, so right around here. This is where I was kind of confused because gold started going down. I didn't quite understand that, but my rationale was that people are switching out gold for stocks because stocks would have higher returns than gold, I guess. But gold is back on the menu, I guess, so we'll continue to watch what happens here. I'm guessing it's going to correct downwards a little bit before it continues to go up. But I do have a Fidelity account with gold and FANG stocks, I think. Yeah, I think it's Fingu and GDXU. So yeah, we'll see how things go there, and then we'll take it from there. Great. Thanks so much for dialing in with me. I hope to catch you on the next one. I'm going to start going over more specific stocks and my personal opinions of them. We're going to do a little deep dive into where we think those stocks are going and why we think that way. Again, not investment advice, just my own personal thoughts and my thought process on how I invest, hopefully teaching you the skills to make those kinds of decisions and look for that kind of information yourself in the future. Just to list off a couple of the things that I think I'll try to talk about in more depth. Hood, SoFi, QS, Open, ASTS, HIMS, UPS, TEM. So stay in tune. I'm going to talk more about those in separate videos. I hope to catch you in the next ones. Thanks. Have a good one.